Hi everybody, it's Chris here from Stern Education. I'm just going to do a quick 4 majors update, analysis update for this month. It's going to give you my indication of what's likely to occur this month just by looking at the CTC on our 4-screen long-term update. So I've got a weekly, daily, a 4-hour and hourly chart in front of me. I found these quite useful when looking at the long-term picture. Let's start with the weekly. You'll notice that pair is obviously very much indeed in an uptrend. However, over the past couple of months, we've seen the pair forming lower swings. So ideally, what you're seeing now is the intermediate trend being dictated to the downside. And you'll notice that the previous week we saw almost a bearish arami. Ideally, when we see an up candle followed by a small drive downside at a potential resistance level, in this case this particular intermediate trend, we saw this bearish outlook form, and then what we've seen is over the past week or so we've seen news coming out, the austerity plan in Euro, etc., being approved. However, the underlying sentiment is still bearish, and we've seen some selling that's occurred at the beginning of this week. So if this remains, then what we could see is price reattempting the lows we saw at 142.100 recently at the 20-period moving average. You can see over the past couple of months the 20-period moving average acting as a support area just recently. So we can see we are in a squeeze pattern. That's all happening above the institutional moving average as well as all the moving averages, and that's indicating, the CTC is indicating that we're still in an upside movement. However, we are in a consolidation range, and recently on the hard right edge we are seeing further selling occurring in recent days. So as it stands now, if price is unable to trade higher than at least the 14,500 mark, then we're not going to be seeing price reattempting those highs we saw back in early or late April, early March at the 14,850 mark for this pair. So as it stands at the moment now, you can see indecision, a lot of arrows, primarily price is still trading to the upside, but we've got a lot of arrows giving us an indication that there is a bit of a hesitation. The last arrow we've got is the red one. However, this candle hasn't closed yet, so as the close of play of Friday this week, we should have an indication of what price is likely to do. If we do have a bearish engulfing, then obviously what we're looking for is potentially further downside movement on our intraday or on our smaller time frames, and this is where we look at our daily, our 4-hour, etc., to give us a further confirmation. Daily, you can see that downtrend in play. 2 days prior we had an indecision at this resistance level, and yesterday we had a bearish engulfing which engulfed literally 3 days worth of data, and we've seen price revert to the downside even as of the Asian market this morning on the 6th of July. So as it stands now, price is moving to the downside, is trading below the two. You can see the two moving averages here, the 20 and 50 are being squeezed together, and you can see the bearishness in this pattern. Notice as per the week, CTC is well extended to the upside, primarily because you can see that this pair on a daily time frame has been making new highs and swinging higher, which dictates an uptrend. But you'll notice at the hard right edge that we are being squeezed, as I mentioned on the weekly. So ideally our next target would roughly be in or around the previous support level. We've got one here at 14,300 as possible target, but we could see price go down as far as the 42.25 or the 42.2500 mark, which would take us back to the major moving average, because we've seen a bit of hesitation here in the past. So as it stands now, we're still long, however we're in a consolidation long. If you look at our 4-hour, notice on our 4-hour we have the CTC going in our favor. This candle that is forming right now is still in place. We have to wait for the 4-hour to close. Once that's closed, it'll give us an idea that the CTC should go red across the board. If you look at where prices, where the trend, this uptrend, this intraday uptrend started on the 27th to the high, and you do a fib retracement, you'll notice that it's now testing the 50 period, which is in thereabouts with the 200 institutional moving average. If you don't see price bouncing here in the next couple of hours or so, and we see a close lower, then 61.8 is likely to be our next target here, just below the 14,2900 mark. If we see price failing to find a support at this level, then we know that the actual uptrend has been now nullified, and we should be looking for further opportunities to the downside and back to where the initial trend, this trend of here, started way back down here at the 14,1100 mark. So as it stands now, the intraday sentiment is looking bearish on this pair. Long term, we're still looking ultimately bullish. Just be aware that we could be seeing a pullback on a daily in this consolidation range, and our next target could ultimately be the 14,300 mark if you don't see any hesitation or any buying hesitation. You can see here roughly around where price is really trading at the moment now. There's a consolidation range, and you could see potentially a bounce at the 14,3200 mark. Failure to find support at this level here or consolidate, then there's more likelihood of a break lower, and we could be seeing a bounce or continuation to the downside to at least the 14.2550 mark for this pair. The next pair I'm looking at is the sterling against US dollar on our long-term setup. Here you'll notice there's a weekly chart. If I zoom out, you'll notice that this pair has been an uptrend, but recently we have seen a breach of that trend. And if I just extend it, you can see in the past 2 weeks we've had a break below that consolidation. We've seen lower swings going into that break, and the CTC on a weekly has given us the red arrow, and the candle that's in play now is red, but we've got to wait for the close of this candle obviously to see further downside movement. Ideally we want a closing lower than the prior candle. In this case, a low of 159.140 will definitely see us trading or giving us indication of further downside movement, and hopefully by then the CTC will start to match up, i.e. the red candle, red bar, followed by the red CTC bands on either side. So as it stands at the moment now, you can see that price has been on a downswing, and we've had a slight pullback. However, we're seeing price now trading at the lower end of that, and as long as it's trading below the prior support, in this case here, we're looking at roughly the 16150 or 500 mark, then we're looking at a possible breakout, pullback, and then a continuation to the downside. So if we look at our daily time frame, you'll notice that the CTC has been in a selling or in a short indication. Notice if I zoom out, you'll notice that the major uptrend has been breached just recently. This is the major trend, and if I just make a nice and strong so you guys can see it, there we go. We've had a consolidation, a bit of a squeeze pattern, a breakout, a consolidation under this now the new resistance, and a continuation to the downside. Then we saw price pull back. However, that was short-lived because the prior support area here just above the 16,100 mark has come to play, and we've had a bit of indecision going into the last couple of days, and we've seen price move to the downside because it's failing at this level. The short-term trend, you can see it now with this swing low, or the underside is now in play, and the institution moving average is also in play. So cable, we need to see this candle, today's candle, closing lower, and ideally our next target would be the previous support area at the 15,200 mark, if I'm not mistaken. So things are looking bearish both on the daily. The 4-hour chart is giving us a consolidation band. You can see that quite clearly. The prior support in the past has been reattempted over the past day or so, and we're seeing a consolidation. However, the last 4-hour candle has been bearish, which is giving us an indication that we're looking at an exhaustion at this level. So until such time as 1100 is still considered as the resistance level, then we're going to see price trading to the downside. if sterling is to gain a bit of strength, then obviously we need to be trading above this area, which has happened to be quite a strong prior support and now a strong resistance level. Notice over the past couple of weeks we've attempted to trade higher, but we've failed. So as it stands now, our next target intraday should be roughly around the just above the 15.9200 mark. Next up is the US dollar against the Swiss franc. Let's have a look at the weekly outlook for this pair. Notice that the US dollar has been trading at an all-time low against the Swiss franc. If I zoom out, you can see data back down to 2004. We don't need to go that far, but you'll notice just how bearish this particular setup is. And if I just project a line on the previous swings to the downside, you can see that the next one's not too far off, roughly around the 8100 mark. So you can see it's consolidating now in a sideways motion. Notice that the support and resistance levels are pretty much it's pretty much going sideways, and the longer it goes sideways, and with the outlook with the potential support here not too far off, we could see this pair finding a bit of short-term or long-term support, and this could bode well for potential consolidation to the upside. We know this pair has been trading to an all-time low. However, we could be seeing something happening very soon, because as price is moving sideways, then the major trend is going to come into play. The weekly major trend, if I just put it in so you guys can see it, is not too far off, and in a bearish move with the CTC all in our favor to the downside and the moving averages evenly spread out, confirming this very strong downtrend. We need to see price obviously trading above this range, above at least the 0.8600 in this case, or ideally above the 20-period moving average, which is acting as support level, resistance level in the past at the 8800 mark. Trading above that would confirm we'll probably see a blue arrow, blue candle, and the CT going long. But until such time as that occurs, we're still looking for negativity or shorting opportunities, and you can see a clear indication that there's a ceiling level for this pair, roughly around the 8500 mark. So price is going to be trading above that, but if once it's done that, then it's got to compete against the major downtrend. So we could see some action in the next week or so. So hold on tight. If you're not looking for, or you're not in this particular trade, to wait to see if there's a bearish engulfing to the downside to confirm that break to the lower, and then we could be looking at price reattempting, in this case, the bottom end of this wick here. So the open of this candle here at 83.13 would be ideally the next target, and a break below that, then we're looking at least the 8100 mark. The daily setup, you can see that consolidation range I mentioned. Price has failed to break and trade lower than that area. You can see that consolidation box. If I just put it in, that was a prior support. If I make it nice and thick, you'll be able to see that consolidation range. So price has to be trading either above that or below that to give us an idea of further movement. Otherwise, we're just going to see consolidation range in this. And intraday, yeah, you can literally find some points, but long term, if you're trading long term strategy, then ideally you want to see a break above the 8600 and close higher than that to confirm upside movement, or close lower than the 8300 mark to give you further downside movement to at least the 8100, as I mentioned on the weekly chart. Next up is our last look at the US dollar against Japanese yen for the four majors, the weekly outlook. And you'll notice this pair, as the same with the US dollar Swiss franc, you can see the US dollar has been trading at an all-time low against the yen. And recently you can see that price has found some sort of support level at the 80 mark, and we're trading sideways now in a consolidation range. And I'll just put that in so you can see. So price is bouncing along this range on a weekly, but nonetheless still forging. If you go for the intraday, you can still see forging lower swings. So price failing to trade any higher in this consolidation range, and it's now being squeezed between 2 points. The major trend ideally is still negative. We need to be trading above that to obviously confirm further further potential upside movement. And so it's doing exactly that, then we're looking for further shorting opportunities. The 20-period moving average has acted as a great resistance level in the past, and we are trading at that area as we speak on a weekly time frame. This will be more, you should be able to see a lot better on a daily time frame. There again, as I mentioned, the 80 being a strong support area for this pair over the past couple of months. And as long as trading above that, then obviously we're going to see a potential upside movement. You can see the consolidation band, as I mentioned, is just above where price is trading at the moment. And it's being considered, the highs are getting lower and lower, and we're being squeezed in this pattern. Something's got to give soon. It's either the US dollar is going to break to the upside and confirm further upside movement, or because we're in a negative downtrend, there's a good possibility that the US dollar could break to the downside, and if that's the case, we could be looking at the first potential target being the all-time low that we saw just before the intervention by the G7 countries early in March, to roughly around the 77, just short of the 77 mark. So as it stands now, consolidating in a range. Notice we're getting higher swings and prices moving higher, but in a consolidation range. Price over the past couple of days, or the past day or so, has failed to break above a previous high. And as the trading day today, on the 6th of July, you can see prices trading at the upper end of this candle. However, it hasn't traded higher. We want to see it close higher than this prior resistance level, and we could be looking at potentially our next target being just short of the 81 100 mark, if so, for this pair. So CTC is blue for the daily. However, because we're in a negative trend, it's not going to give us a confirmation. Intraday 4 hour, yeah, the CTC has gone blue, and we can see this higher swings. This price is moving up to the upside, away from the 80, which happened to be our prior support area, our long-term support. And if that's the case, then we should be looking ultimately at the 81.70 mark being our next potential target for this pair. I hope this was able to help you, and I look forward to giving you some more results later in the next month. Take care.